Here's a look at that bloodbath I've been talking about. Let's talk more about those market movements now with Martin Smith, Portfolio Manager at eNCA Capital. Thank you very much for your time this afternoon, Martin. And we've got so much to get through because of all this drama. We've got very little time, so I'm going to try to get through as much as I can, starting with the local bourse in line with global markets. Complete bloodbath because of what we are seeing between Ukraine and Russia.
Yeah, absolutely. Look, we've held up relatively well in comparison to the rest of the world with regards to our market. I think we're protected somewhat because of what our PGMs and gold stocks are doing, and they obviously make up a significant weight in our index. So that's protected us somewhat. But like you said, the main story is what's happening in Russia and Ukraine. And you've got to remember, we're already on a little bit of a slippery slope insofar as sentiment is concerned, because the market was already looking towards the Fed and inflation concerns and the likes. We already had quite an aggressive sell-off in January and the start of February, and now it's compounded by this. So it's a lot of risk-off sentiment at the moment, and it's pretty tough out there.
No, absolutely. And we're seeing, obviously, I mentioned a little bit earlier that record price in the price of Brent crude numbers we haven't seen in years. I mean, your thoughts on the implications for us who are a major importer of oil?
Yeah, so I mean, we need to look at it also in the context of Russia. And Russia is the third biggest supplier of oil in the world, behind Saudi Arabia and the States. They supply about 10% of the world's oil. So if there's something happens there with regards to affecting the supply side of things, you can see why people have got a bit nervous and why the oil price has reacted the way it has. On top of that, you've seen what OPEC Plus have done anyways in the kind of preceding the events in Ukraine and Russia with regards to not really meeting their targets insofar as increasing oil production. So I think we're going to see higher oil prices for longer, unfortunately.
And what is your view then with the local unit? Because that's also weakened to a 2-week low, I suppose partly because of what we are seeing in these geopolitical developments.
Yeah, absolutely. Look, I think when I spoke to you a couple of weeks ago, I was saying I'm still quite bullish on the South African markets for the next year. Obviously, the commodity side of things is going to be quite a nice driver of growth on our markets. But I think risk appetite can really come in and affect things. So I wouldn't be rushing into things at the moment, but I'd still, assuming we have a reasonable outcome in the next kind of 6 to 9 months, I still assume that we will have a relatively good outcome from a returns perspective in our local markets.
Let's turn to some company news now, Martin. We had some numbers coming through from Spur Corporation as well as AB InBev, and I'm asking you about them at the same time because they both reflected a similar story. For AB InBev, really great profits because of a higher demand, and then for Spur Corporation, people actually sitting down and enjoying meals at the restaurants really helped with its profits.
Yeah, absolutely. And I think let's start with Spur first, if that's all right. Your point is well made. People sitting down in restaurants is a higher margin business than effectively people ordering takeaways and those types of things. So, I mean, they had a low base to kind of go off of because obviously they're in the eye of the storm from a COVID perspective, but they've rebounded quite nicely. The share price has done the same. I mean, I think most of the easy money's been made. I mean, it was down to 12 Rand at a stage, it's now 23 odd Rand. But I still think there's some room for improvement. And yeah, I think they might still have a little bit of upside from a share price perspective. Would you like me to continue with Anheuser-Busch?
Yes, finish off with Anheuser, please, very quickly.
Okay, Perfect. Anheuser-Busch, decent set of numbers out there. No real kind of surprises or anything like that. They're guiding towards 4 to 8% EBITDA growth going forward, which is pretty much what the market was expecting. But I'm not going to be rushing out to buy the business. I think if you look at the balance sheet and how that'll translate into a dividend, is concerned, maybe other places to look for, as well as the kind of headwinds they're facing insofar as emerging market currencies and commodity prices are looking, because they hedge a year forward. So a couple of headwinds, dividend profile not really that exciting. I'm happy to kind of sit on the sidelines for now.
No, absolutely. Martin Smith, as always, thank you very much for your time this afternoon, portfolio manager at eNCA Capital. So, Sally, I'll be back in the next bulletin, still reflecting on the budget speech by Enoch Godongwana.